Good evening, everyone. Welcome to the Adams Brothers podcast. Happy Monday to each and every last one of you. It's a rainy day here in beautiful South Florida. We are joined here this evening with Miss Cekala Holness, and she's going to be talking to us about some financial planning, 401ks, life insurance, and all of that good stuff. So we'd like to welcome Miss Cekala Holness to the Adams Brothers podcast. Good evening.
Good evening. Thank you so much for having me. How y'all doing?
Doing good.
We're doing good. Good. Happy to have you here.
Definitely.
Always good to see you and your family. We got your cousin coming up at 7.
Yep.
And she's always full of life and gives us so much information. So we always look forward to talking to her, and we'll be looking forward to talking to you as well. So
Thank you.
like I said off air before we went live, you're always welcome on this podcast. So go ahead and tell everybody out there that doesn't know Cekala Holness, tell them about you and everything that you would like for them to know before we get into the questions.
All right. Good evening, everyone. As he said before, I am Cekala Holness, born and raised in Deerfield Beach. Many people probably know of my family. I come from an education background. Went to Deerfield High School, got my bachelor's degree from FAU in biology education. Received my master's degree from National University in Educational Technology. I am the owner of Generational Wealth Builders of Broward, where we educate families to build and grow their legacy so that their generations will have a legacy and not just leave liability behind for their children.
Okay. And I'm looking at your flyer right now. I see that you offer life insurance. Why don't we just start from the top there? Because we was talking off air again about life insurance and the lack of life insurance by so many people. And we understand that there's some people that can't get life insurance because of medical reasons. So I'll tell the viewers out there what type of life insurance you offer and how they can get life insurance. Just tell them everything they need to know about getting life insurance if they don't have it.
Okay, so most definitely. So people need to understand we're on a crusade. We're on a mission to help our people understand the importance of life insurance.
Yes.
You know, all too often people want to start a GoFundMe account because their loved ones may not have a life insurance policy for whatever reason, which is understandable. What people need to understand, when you need life insurance, that's probably the time you're not going to be able to get it. It's an application process. You don't just automatically get life insurance on, a family member. So we tell people, listen, you need to start young. As much as we don't like to think about it, we need to make sure our kids are insured. I had made a post a few days ago. I said we have insurance on our phone, our car, and our house. But people don't want to get life insurance on their kids. They're like, oh, they're kids. They don't need it. Contrary to popular belief, they do need it. Y'all remember back in the day when the man used to come to grandma and great grandma's house and used to collect the monthly life insurance policy?
Yes, indeed.
Yeah.
They was like, here go this check for the life insurance. And that's what we need to continue doing. If you can get Starbucks, Dunkin', wait in line for the newest Jordan release, you can afford life insurance. People think it's expensive and it's not. We have different types of insurance that people can apply for. Everybody knows about term. We have the IUL, which is the Index Universal Life, which is we're an advocate for getting that for your kids. Anyone who's under the age of 18, they need to have it. And a lot of times I talk to people and they're like, oh, I have life insurance through my job. I don't need life insurance. Yes, you do. If your job offers it and it's free, by all means take it because it's free. But you need something outside of work. Is your job guaranteed? What if there's layoffs? We see what's going on with the economy now. Are you guaranteed to keep your job? You may not be. And people don't think about that. They're only thinking for today and not tomorrow, next week, next year. You got to leave a legacy, not liability for your children, your generations.
And can you explain, Cekala, I heard you say term. A lot of people really don't know the different types of insurance, like term, whole. Can you explain that to the viewers out there? Because there's a lot of people don't know. Trust me, they don't.
So term is going to be your most basic life insurance. So think about your car insurance. Every month you pay into your car insurance in case you get into an accident. Term insurance is just like that. You're paying term in case you die. It's going to be very affordable, very cheap. And then it's only for a certain amount of time, usually 10, 15, 20, or 30 years. The good thing about term insurance is, let's say you reach the end of that policy for the 30 years and you're still alive, you have what's called guaranteed insurability. It means whatever your health or medical condition is, the insurance company is still going to continue your life insurance for you. Now, it's going to be a bit more expensive, obviously, because you're older. But like I said, the positive to that is the guaranteed insurability. Now, we also have what's called IUL, Index Universal Life. This is a 2-for-1, and this is what we try to educate and advocate all parents on. This is for mostly your young kids, young adults. So with this policy, you get the life insurance benefit, or the, let's say, $100,000 policy. That same monthly premium that you pay for your policy, it is also invested in the market. So it's like a 2-for-1. You have your policy, and it's also allowing your money to grow. Now, the good thing about IUL policy is we have a floor. So what happens if there's a floor? It stops you from falling into a hole. So when the market goes down, our floor stops your money from going down, but your money can continue to grow. We see what's going on with the market now. People are like, oh no, I have my 401k. I'm good when I get ready to retire. But if that market takes a plunge, guess where your money is going? It's going down as well. And a lot of people don't realize that. It's like, they was like, no, I've been paying into my 401k through my job, so I'm good. You may be good today, but what might happen tomorrow if that market crashes? And people are not thinking in the long run. So we tell people, why don't you be your own bank? Why don't you learn to invest and save your money so that you don't have to rely on your 401k? You don't have to rely on the stock market. What do you think banks do? You know, banks have life insurance on people who take out loans through them.
Really?
I didn't know that.
I didn't know that either.
I know sometimes you could add it on like for $10 a month, but I didn't know that. No. I'm glad.
So a lot of times, if you add it on, you become, or your person becomes, the contingent beneficiary. So you have your beneficiary, which is the first person that will get a portion of the money if something happens. And then you have the contingent, and you can split it whatever percentage. Or if the primary beneficiary passes away, then the money goes to the contingent. So banks will be the primary beneficiary. So the person who took out the loan, if they pass away, obviously that loan is going to pay any outstanding debt to the bank instead of relying on a family member to pay it, whether it be a house, a car, a boat, motorcycle, anything like that. So we tell people, be your own bank. Don't let them grow millions and billions of dollars off of your money.
Right. So,
and what about whole insurance? That was a whole life insurance.
So we do not promote that type of insurance. Now, there are some people who insist on getting it because they think it's great. But I'm going to tell people, and a lot of people will not educate others on what whole life insurance is. So your whole life insurance, you have a policy for $100,000, and it's also growing, let's say, the $50,000. So you're thinking, if mom or dad passes away and they have a whole life policy, there's $150,000 here, and it also grew 50,000 or 100 and then 50. You're thinking you're going to get the 150, right?
Yes.
No, you're going to get the greater amount, which is going to be the 100,000. So where does that $50,000 go? It goes back to the insurance company. And they don't educate that, because think about it. If I'm getting a whole life policy and my policy is $100,000 and it grew $50,000 more, then I'm going to take it, because that's double dipping. You're not getting both, and they're not going to explain that to you. Because if that was the case, if you're going to get both, everybody would have it, and not everybody does. So
I was always told, and I'm glad you're explaining this. Honestly, until today, everyone say, "Oh, don't get term, get whole." That's what I was always told.
Because whoever taught them most likely works for a company that sells primarily whole life insurance. That's just like saying, okay, we're in tax return season and you paid $10,000 in your tax returns, right? Or taxes when you work. So
Mhm.
now you filed your tax return and you're getting back $8,000. And it's like, oh, you know what? Okay, so now I'm going to give you back the 10,000 you paid throughout the year too. It
Mhm.
don't work like that. You're going to get the amount that they want you to have. But when it comes to whole life, they're going to obviously give the beneficiary the larger amount and the insurance company is going to keep the rest. That's how
Hmm.
they can make it seem um, affordable and appealing to their clients. Term is basic. Just like I
Mhm.
said, think about your car insurance.
Mhm.
If you never get into an accident for the year, is the car insurance company going to give you back all your premiums you paid?
No.
Mhm.
No, because they're covering you in case you get into an accident.
Right.
Well, let's say if you wanted like me, I have grandkids like most of us.
Mhm.
I and if you add all of your grandkids on, like me, I have 5 grandkids. Let's say if I wanted to add them on the IUL for the younger kids, and how would that do they give you like a special rate for adding all of the kids on, or is it more for just one? How do they do that?
So with the IUL, when it comes to young kids, it's very affordable. But for the price of a pair of Jordans, you can pay up a child's policy for the whole year. That's how affordable it is.
Right.
And the parents can have an IUL policy on their kids. The grandparents can have one on their children, and all policies are independent of each other. So let's say mom has one on little Johnny for 100,000. You decide to get one on little Johnny for 100,000. God forbid something happens to little Johnny. Mom is
Right.
going to get a check for 100,000. You're going to get a check for 100,000. It's not going to be split. Each policy is independent of each other.
Okay. Well, that's good to know. Because you can never have enough on your kids and grandkids. So
Right.
that's a good thing. That's a real good thing, and I'm glad you explained that because
Yes.
you know some people just won't explain it, and it's all about money for them. It's just about making a dollar. So
Exactly.
yes. So and the next on your list is annuities. So I'm not too familiar with annuities. And I need to be educated on annuities. So please educate me and
Me
maybe my
too.
brother too
No,
on
I
what
don't know.
annuities
I'm
is and how
telling
they
you,
work.
I have no idea
So
what I'm
I have
doing.
annuities
no
is
idea.
basically you're your bank. So I used to work for a previous charter school, and I had money sitting in a 401k. So now that I'm no longer working at that particular charter school and I'm at a new school, then I would take that money from the old 401k and I would invest it into an annuity. Because I'm relatively young, I don't need to touch any retirement money right now. So that money will sit there and grow. So by the time I do get ready to retire, I don't have to go and be a greeter at Walmart. I don't have to go and find a part time job. I can continue educating families and providing this information. So there are so many people that may have 401k money sitting at an old job that they have no idea. Because obviously the company's not going to say, hey, you got this money sitting here. Make sure you take it before you move on. They're going to let that money sit there. So we
Mhm.
have to remember when we pay into a 401k at our job, we're paying them to hold our money for us until we retire. Then when you get ready to retire from that job, they're going to say, okay, we need to take our cut because we were holding your money for you until you needed it. It's not free money.
Yeah.
Whereas the annuities, that's your money. Nobody's going to say, oh, give me my cut for holding your money. That's teaching you to be your own bank. And the younger people can start building their annuity, the better it can be. For example, if you had an 18-year-old that put in, let's say, $100 a month for an annuity, by the time they actually reach retirement age, they're going to be probably 7-figure millionaires where they will never have to worry about working or retiring. And that's why I tell people your grandparents, your great grandparents, some of these schools, you see ninth and 10th graders driving these real nice cars because their great grandparents, they had life insurance policies that they left to their children and their grandchildren so that they didn't have to stress and they didn't have to suffer. And that's the purpose of a life insurance policy. We want our kids to be okay. We don't want them to worry about how am I going to pay for this funeral? Or I can't take off work because I got to go back to work. How are you going to properly grieve when you're so stressed about going back to work?
Right. That's good information, because up until this point, I had no idea what an annuity was. I mean, I had a basic idea, but I didn't know how they operate, and which is probably one of the reasons why I never really looked into it. So, but I'm glad that you are educating us here and the viewers out there this evening as well. So, hopefully everybody's out there is learning something just like me.
And there's people that charge to sit with them to get this information. We offer free consultation. We offer free quotes. We will go over these numbers with you because we know numbers don't lie. You need to see it in black and white to see, if I invest this amount, how much will I have in 10, 15, 20 years? And there's, like I said, there's financial advisors that will charge you by the hour to have an appointment with them so that they can go over this information with you. Because our mission, our crusade is to educate our families, our people on the importance. We don't mind sharing this information. We're not gatekeeping it. Everybody needs to know. They don't teach real financial literacy in school anymore. Remember in school, we used to learn how to write a check, sign a check. We used to cooking, sewing, wood shop. Now these kids, it's about gaming, technology. And granted, we are in a world that is full of technology, but who's going to fix the technology when the technology goes down?
Yeah, it needs somebody to fix it.
Yeah,
exactly.
Definitely. Do you offer long-term disability and long-term care insurance?
Yes, so we do that also. A few of our carriers, the best part about my company is we don't just work with one set carrier. You may be familiar with Lincoln Financial, National Life Group. Who else do we have? AIG, Silac, Mutual of Omaha, Foresters, John Hancock. A lot of these companies people are very familiar with. So I can work directly with them to find the best policy for that person's particular needs.
Okay.
It's not a one size fits all.
Mutual of Omaha. I didn't even know they were still around.
Yeah.
Oh yes.
They still around?
Well, we used to see those commercials in the early 70s. You watching TV when you only had about 12 channels, and you would see Mutual of Omaha, especially on Sunday nights when Wild Kingdom used to come on. So you would all the time see they was like one of the sponsors. Those older people out there, that's my age. Y'all know what I'm talking about out there now. I know y'all reminiscing now, but yeah, on Sunday nights you used to always see Mutual of Omaha, and they used to sponsor Wild Kingdom at that time. So
we have carriers. It will insure people that smoke, regardless of what you smoke. They will insure you because they feel as though, listen, we know it's hard to get insurance. We'd rather you have something than nothing. We also work with carriers if you develop a chronic illness. Let's say you have $100,000 policy and you develop a chronic illness such as cancer. They will pay you 80% of your policy so that you don't have to suffer financially while you're going through your treatment or your situation. And then you'll be able to, focus on healing and getting better and going back to work. Not very many companies are not going to do that.
Right.
We have some carriers where, let's say the parents have, life insurance and they pass away. There's some carriers that will pay child support to the child monthly and the caregiver monthly as well.
Okay.
So it's a lot of options that people are not aware of. It's just not, term and then some other stuff and IUL. There's definitely options for almost every situation.
Yeah, health insurance and like vision and you offer health.
We don't do health.
Okay.
No, we don't do health. We don't do vision. We do the retirement, life, annuities, final expense, debt. We also do debt settlement. That's another thing.
Explain that to us. Debt settlement.
Well, it's on the list. It's on the list. We're gonna get down to that. Yeah, okay. It's on the list. I'm just going right down the list. She
Okay,
got that
I
on
see
there.
the list. Usually we have it on the screen, but
Right,
he
right.
just got it over there now.
So if you're just joining us, we're joined here by Miss Cekala Holness, right here from Deerfield Beach, from Generational Wealth Builders, and so far we've talked about life insurance, annuities, and now we're getting the 401k rollovers, 401ks and 401ks rollovers. Tell us all about 401k rollover.
So this is the one I was talking about earlier. So if you have a previous job that you used to work to, you may have 401k money sitting there. We show you how to roll that over into an annuity / investment account so that it can grow much better than the 1, 2, 3% in whatever vehicle that your company currently has, or your former company currently has. Also, there's a lot of jobs that will match your 401k contribution. Instead of paying into that 401k, create your own bank. That comes into play with your annuities, and also your life insurance policy. So there's a lot of, celebrities, they've been talking about it. They said the quickest way to grow your money, invest your money, is life insurance. Whenever somebody needs to legally or indiscreetly move a large amount of money, life insurance. So it's all about education. A lot of people will use terms that they're not familiar with, but we're all about gaining and growing our money. Nobody likes to lose their money. And investing or putting your money in the stock market is a sure way to actually do that, because it's not concrete. It's up and down, up and down. There is no definitive of the stock market. And when it goes up, what do people want to do? They want to pull their money out.
Yeah.
And then when it goes down, they get scared. They start sweating. They're like, oh my goodness, what am I going to do?
Mm-hmm. Okay. So do you also do 457s?
No, we don't do the 457.
Okay.
But we do have financial planners also on our team that are specialized in that. We have some that have actually retired from their jobs that are, experts in providing some information on those as well.
Okay. So Desiree Wright Posey said, I came in late. May I ask who is speaking and what company she's with? We are talking to Miss Cekala Holness. She's from Deerfield Beach, born and raised with the Deerfield High, and she's the owner of, I believe, of Generational Wealth Builders of Broward.
Yes.
So Generational Wealth Builders of Broward. Cekala Holness. You all know the Holness. You may not recognize that last name, but if you say McCall, Batman, and Jamar Terra, you know who they all connected to, right
Uncle
there.
Batman was my classmate.
Yeah.
Rest in peace. We used to walk to school together in the morning in elementary school.
Right. So
he was the life of the party, huh?
Yeah, yes, he was.
Even way back then.
Always.
In 1972, 73, he was the same old guy.
Right.
Kept us laughing.
Yeah.
Yes, he did.
Yes, that's our
Uncle. Good guy. He's a good guy. He's sorely missed around here. He kept everybody laughing.
And kept their cars maintained too.
Yeah, yes, he did. Yes, he did.
Definitely. Yes.
Okay, so next on the list is IRA Roth and IRAs rollovers. So explain to the people about IRAs and Roth IRA rollover.
So those all tie in together, your 401k, your IRA, the Roth IRA. So again, a lot of these companies, when they promote getting these type of accounts, they're making a lot of money. They're basically charging you to hold your money so that when it's time for you to retire, there's a lot of stipulations. You're going to pay to have to take your money out. Everybody knows about the 59 and a half year age without any penalty. And again, still, why are you paying these people to hold the money that's yours? We want to teach you to be your own bank. And for those of you that are just joining us, I'm the owner of Generational Wealth Builders of Broward, a financial marketing organization. I work with a variety of carriers, including National Life Group, Mutual of Omaha, SILAC, Lincoln Financial, John Hancock, Foresters, just to name a few. So it's not a one size fits all. Whatever your situation may be or whatever it is that you're looking for, we can show you the different options for your needs. The main goal is for you to leave a legacy and not liability to your family or your children.
Okay. And next up is retirement plans. We all need to have some plan in place for retirement and be able to put some money away and be able to travel and go on cruises and go to Vegas and go down, go wherever you want to go in this world. So tell everyone about your retirement plans.
So for those of you that still have a good ways to go before retirement, what is a sure way to grow your money and ensure yourself and your legacy? It's life insurance. It's an IUL. We have the index universal life. We also have the fixed index life insurance as well. So you pay your monthly premium for your life insurance policy. That amount is invested as well to help your money grow. The great thing about the IUL policy is when the market goes down, your money doesn't go down as well. When the market goes up, then your money starts to grow again. So by the time you're ready to retire, you still have your life insurance policy in effect, but you also have that retirement portion that you can take from as well, so that you can choose a monthly payout. You can pick a lump sum. That way you don't feel as though you have to go be a greeter at Walmart, unless you just need to get out of the house and you're bored. So you go to work because you choose to go to work, not because you have to go to work.
Right.
So we teach you that life insurance policy with an investment aspect to it will help when it's time for you to retirement. Because right now, what I'm paying into is, providing retirement for the people that are already retired. And we see how that's going. By the time I retire, there probably won't be much from the government. So am I going to stress? No, because I already have plans in place that will still provide me with a monthly income that I can survive on.
Just like a lot of people have been, looking forward to Social Security. I know I have been, but with the orange man in office right now, you don't know what's going to happen to it. And let's say if you start working at 16 and you work for 50 years of your life, and then you pay into something, and then when it's time for you to collect, they may tell you it's not, you're not eligible for it.
Right.
So
it's a lot of uncertainty.
It is.
Oh, yes.
And that's why you have to have a retirement plan in place.
Yeah, you better have something.
Right. So that's some real good information. And next up is long-term care. Tell us about the long-term care.
So the long-term care is also to, let's say you develop a chronic or critical illness. While you're going through, if you develop cancer or something like that, while you're going through chemo or any type of treatment, your life insurance policy will pay out 1% of that policy so that you don't have to stress even more while you're going through a particular treatment, depending on how long it may last. So you still have your policy in effect, and you're also receiving a monthly benefit so that you can still pay your mortgage or your rent. You can still eat, you can still pay the bills. And a lot of people don't understand retirement is not an age. Retirement is a number. You got to think about how much money do you need to have to retire to still be comfortable. So compared to what you're making now, how much do you need to have saved up in retirement so that you can live more than a year, more than 6 months?
Mm-hmm. Real good information.
Yes.
Yeah, real good information. A lot of people don't think about these things,
No, they don't.
They live for today. I know when I was young, our dad told us, make sure you get a good job with a good defined benefit pension. And I'm like 20 years old. I'm like, man, I ain't thinking about no pension, man. I want as much money as I can get in my check right now. I ain't thinking about a pension, but as the years went on, it made a whole lot of sense to me. I started, looking into it and educating myself on pensions and everything. And I'm just happy, that we had our dad and our mom in our lives,
and others,
others around us who were smart, and educated enough to, tell us about, educate us about pensions and retirement plans.
And I want to say you a quick little tidbit. We both worked in government for the city of Deerfield. Worked there over 25 years. And we were able to retire with a defined pension plan where they pay you for the rest of your life. But I remember when we were there, and the year was around 1990, and the city came in with at first everyone at that time from the 70s or whatever had the defined pension plan, and then the city, to save money, the city manager at that time around 1990, he introduced a 401, and I couldn't believe they talked so many people to getting out of the defined pension plan and going into the 401. But we knew what it was. They were able to borrow money off of their pension plan, and with the pension plan that the city had at that time, they were not able to borrow. And a lot of people jumped out, and after they got out and they saw people retiring at the back end now, because it was like me when I first got there. Like Daryl said, I had my dad, I had other people there, elders that were there that explained it to me, because I was naive to everything. But on the back end, when the day finally came, from now when you're 20 to you're close to 50 now, and everyone go to retirement, all the people that got out borrowed were upset with the people that were able to leave now.
Yeah.
And they was like, well, we got fooled, and they fooled us.
Nobody fooled you.
No.
You should have educated yourself. This is why we're doing this podcast. This is why you need to educate yourself on pensions and how to plan and what and the do's and the don'ts, because they sold them a dream that they were going to be millionaires, and they didn't. Then, to my knowledge, none of them are millionaires right now. They just they got fooled.
Some of the people that got out, I thought were very fine. They sold insurance just like kind of in the wealth business like you were, and I thought they were the top of the top notch, and they got out. And some of them are still there right now.
Yeah,
it's been there about almost 50 years. Been there about 50 years right now. Some of them are still there right now who got out. So, yeah, definitely that's good information, as what you were saying, relating to the like you were saying, everyone, if they want to go be a greeter at Walmart, do that on your own. Don't be forced to up in life to have to get up and go do that after working yourself in the ground for the last 30 years or 35 or almost 40 years. So
when it comes to your money, people need to ask questions. Don't ever feel like it's a burden or a problem. It's your money. You got to think about you and your family. Those people, they're going to get paid regardless.
That's right.
So you got to realize companies are looking out for themselves to keep as much money as they can in their bank accounts.
They are. And next is long-term care. Explain to the viewers out there about the long-term care.
Okay, so we just went over long-term care.
That's
we did.
Yes, we did. That's what I was saying.
Did we do this one?
He's going over the list. I got the list now.
And next on the list is final expense. Tell everybody about the final expense.
She did kind of explain that too a little bit.
So final expense is like a burial plan. A lot of people, they may not be able to afford a large policy. So we do have some carriers that will work with them to see what will fit within their budget. But again, if it's just, you and you really don't have anything to leave behind, then a small policy would make sense. But if you're the breadwinner of your family and something happens to you, who's going to pay the mortgage? Who's going to pay the rent? Who's going to pay the bills? Will your family be able to survive and continue on the way they were as if you were still here? Because remember, they were depending on your income. So you want to make sure that your policy is equivalent to your income should something happen to you. The younger you are, the cheaper life insurance is going to be, and the more valuable and beneficial it is. Like I said before, when you need life insurance, that's the time you're probably not going to be able to get it.
That's very true. That happened in my family. I could put it like that. That happened in my family too. So,
and as far as beneficiaries to that, how should you set the beneficiaries up? Because I always see that. Like Daryl said,
a lot of people like to leave their kids as beneficiaries. If they're under the age of 18, if they're not going to be able to access it because they're technically considered a minor. So that money still is going to sit there until they reach of age. So you want to pick somebody who is over the age of 18 that would be able to legally sign and, account for the money. Then you can put your children as contingent, or even if you have a 17-year-old who's going to be turning 18 soon, it would be okay to put them as the beneficiary also. But the good
Yeah.
thing about it is you want to make sure that your beneficiary is revocable, which means you can change at any time. If you have an irrevocable beneficiary, that means it's locked in and you have to go through all this paperwork to get it changed. So you just contact your provider, your agent, whoever it is. Like if your child now becomes an adult and you want to put them as the beneficiary, then it's just a simple process and you can change it. But never put a minor as a beneficiary because they're not going to be able to legally do anything.
Now, are there anything that's good information, great
Yeah,
information
yeah.
to know? Are there anything that can stop you? Say if something happened, is there anything, clauses or anything in a lot of policies that can stop someone from collecting on policy? Like say like they commit a crime or something like
Yeah,
that.
so all insurance policies have a contestability period. So it's usually 2 years. So they will not pay out if you commit suicide within those 2 years. If it's 2 years and 2 days after, and that 2 days after, and that person, God forbid, decides to commit suicide, the policy will pay out. But within that contestability period, they will not. If they participate in an activity that they know could harm them, they're not going to pay out. If you commit a crime and you die in the process of that crime, then they're not going to pay out. I tell this story. I used to tell it to the kids all the time. I said, you may not have committed the crime, but you're an accessory. Let's say your friend went and robbed a bank. You had no idea what your friend was doing, but they came by and they picked you up. They say, hey, man, come take a ride with me real quick. And you're like, where are we going? It's like, oh, we just, we're going to go up and get something to eat. Like, okay. And they get pulled over because that person had just robbed the bank. Now, mind you, your friend didn't do anything, but because they are in the car with the stolen money and the person who committed a crime, now you're an accessory and it's your word against that person's word, unless you have concrete proof evidence that you had nothing to do with it. So now it's a he say, she say type of situation. But all insurance companies do have a contestability period. And it's usually 2 years where if anything happens, they will try to fight it so that they don't have to pay it out.
And with that, the information, that contestability period there, that's important for people to know, because I know a few people that when their relatives passed away, if you have any kind of prescription drugs or drugs in your system that the doctor didn't prescribe for you, let's say if you took, somebody gave you some painkillers and they weren't prescribed for you, and they find that in your system, because more than likely they're gonna want to do an autopsy, and they find something that wasn't prescribed to you by your doctor, they can deny your policy. Because I know somebody that happened to, and I was like, you mean to tell me just because this person took something to ease the pain and they denied the policy because they were taking some painkillers that weren't prescribed to him by the doctor? It's like they look for little reasons not to pay out the policy.
That's their job. That's their job.
It is.
Yeah.
Same thing with your work life insurance. A lot of people think their work life insurance is great, but nobody reads the fine print. A lot of times with work life insurance, it may say you have to have died on the job in order for them to pay out. How do I know what you were doing outside of work wasn't reckless? Why are we going to pay that? You weren't at work when it happened.
Right.
So that's why I tell people you need to go to your HR. You need to get all the details of your work life insurance policy and see what type of stipulations are there and what reasons they won't pay out. And it's going to be a lot that people won't even imagine.
Oh, yeah.
Oh, yeah.
That fine print is important.
Yeah. The devil is always in the details.
Yeah.
Yep.
So last on this list is debt settlement. And could you tell and explain to the viewers out there about debt settlement?
Yeah, so debt settlement is, we work with another company. It's called Debt Mediator. And basically they help you consolidate all of your debt. Most of these other companies that you see, the commercials, they're going to charge you a higher interest. Whereas with ours, they actually look at what type of debt that you have, and they'll tell you whether or not it's worth consolidating or to put you on a payment plan and saying, this is what you need to work on getting down. This is more affordable. And a lot of our people, they don't like to talk to people that look like them or even know them because they think you're getting in their business. But with Debt Mediator, all we're just the middleman. We connect you with trained and licensed professionals who will handle your information. We don't know anything about your debt. We don't know what credit cards you have. We don't know how much you spend. We don't know what your debt is. We just offer a solution to your problem. And then you talk to those representatives, and then they will take you step by step. So we like to ensure people, when we connect you with debt mediators, you're not telling us your business. You're not telling me your business. I'm just connecting you with someone who is trained and licensed to help you with whatever particular debts that you have.
One of our viewers, Richard Hughes, says that suspended driver's license, you can't obtain life insurance. Is that true?
Yeah. So if you have a suspended license, so again, it's an application process. So they're going to ask you some questions. They have to go through underwriting. They're going to pull your medical information bureau. So anytime you've gone to the doctor, whatever medications they prescribed, whatever you've told your doctor, our underwriting department is going to review that, and they're going to make a determination. There's some people who've had cancer. As long as it's been maintained, it's been treated consistently, they're doing their medications and everything like that, our underwriters will make a decision. Now, based on the HIPAA law, that information does not come back to us. They're not saying, Daryl can't get insurance because he has X, Y, and Z. They will say Daryl has been approved, he has not been approved, and then that's it. And then we go back to our clients and unfortunately, you were not approved. If you would like more information, here's the phone number. You can contact them, or we say, congratulations, you have been approved, and your information, your policy will be sent to you within a certain amount of days.
Wow.
Great information to know.
Yeah, real good.
It's always it seems like when people want to deal with, especially from our own community, people don't want to deal with someone that look like them because for some reason they feel like a trust issue, like certain things are gonna get back out. So do you encounter that often from our community?
I must say I have not encountered it often, but I do a lot of advertising on social media, and a lot of times people do not comment or like, but then they will call me or inbox me and say, hey, I see what you've been posting. Hey, I see you do life insurance, and they want to ask questions. And I tell people, your information is confidential. I'm not telling anybody's business. I have 3 kids. I'm not made for no 3x5 sale. And I'm not the type of person that somebody got to tell me when to wake up, eat, shower, and go to sleep.
Right.
So your information is safe. I'm not jeopardizing my license or my family for anyone.
Right. And speaking of social media, what social media platforms are you on if they're looking for you and would like to reach out to you?
Yes, I'm on Facebook, and I'm also on Instagram, GWB Broward. My website is www.gwbbroward.info. You can go to my website, subscribe. You can inbox me. My business phone number is 954-695-1299. So any of those areas, I'm able to be reached and answer any questions, schedule a free consultation or appointments to discuss all of the products and services that my company offers.
Okay. Is there anything else that you may have forgotten that you would like to share with the viewers out there? Because
I just want to reiterate to everyone, you need to leave a legacy, not liability. Our generation needs to continue our name, generation after generation after generation. Don't let it stop with you, because poverty has to end with us.
You know, I saw on X today earlier, Dr. Boyce Watkins. He's a financial person in the African American community, and he wrote on X earlier today. He said, if you don't purchase life insurance for your family, you don't love your family. And I thought about you, because I know we were having you on here today, and I just thought about that. I'm like, definitely that is something to go with family planning. You got to have life insurance. Got to have that.
Yeah, and
so
I tell people all the time, my business partners are in Palm Beach. They are the owners of Generational Wealth Builders South, GWBS. So they handle the West Palm Beach area, Richard and Lamisha Hughes. I handle the Broward area. And we tell people, we're on a mission. We're on a crusade. We want to talk to everybody who looks like us, the importance of life insurance. Obviously I have 3 kids. I have policies on them. Their dad has policies on them. Their grandparents have policies on them as well. Because again, it's very affordable and it's needed. My kids see me working all the time. That's how we're able to, take trips and enjoy time and being able to do these things without having to stress about, finances, because I'm teaching them young the importance of, money, life insurance, getting your finances in order.
Yeah, I saw Lamisha and her husband. I think that was yesterday. They made a video on Facebook talking about that. I always watch it whenever I see it. Even if I miss it, I go back and watch it because I'm always trying to educate myself on things like that. And you gave out a lot of great information here tonight that very pertinent to the viewers. And the viewers, one of our viewers, Desiree Wright Posey, said, I had my insurance policy since I was 20, thanks to my Aunt Belva, who used to work for Prudential. And she also said, thanks for the information. I will be reaching out.
Yes.
Thank you. Thank you.
And we'll also post your flyer on our page. So anybody that would like to reach out to Cekala, the information, her flyer will be posted on our Adams Brothers Podcast Facebook page. You can go to our page and you can see her flyer. Her contact number is 954-695-1299, or you can reach her at www.gwbbbroward.info or gwbbroward@gmail.com through the email. So we want to thank Cekala Holness for joining us here on the Adams Brothers Podcast. And you're
always welcome to come back
anytime you want. All you have to do is reach out to us. We got your cousin coming up at 7 p.m. So everybody that's watching, don't go nowhere, because
we'll be back.
We got Jamara Terraporta coming up, and she is always full of information and energy about sealing and expunging your arrest record. So please don't go nowhere. We all know somebody that done got cased up and went to jail. So
that's right.
Stay with us. So Cekala, thank you for joining us here on the Adams Brothers Podcast, and enjoy the rest of your evening.
Thank you. You too.